All right. Good afternoon, everybody. This is Jeff Scott, and welcome to this week's edition of the HGS Weekend Review. Make sure I've got everything set up here. So I'm recording, showing my screen. All right. Well, another interesting week in the market. I was talking with one of my friends, George Lee, over the weekend. He was talking about some of his great moves with Netflix and others. And it's been a tough market to be short and a really good market to be long. By the number of crashes coming email warnings I've received over the weekend, somebody must think we're getting near a top, and we'll take a look at that today. Or perhaps we'll just continue to go higher. But the bottom line is it's been an amazing January if you're long. And I would assume if you weren't long, you've been stopped out a long time ago. So the question is, how extended can we go? How long will we go before we get a substantial pullback? Or will we just see a mild correction on the way to taking out continued new highs? Regardless, it's been a very bullish month. And if you are net long, you've had a nice run, I suspect. Disclaimer, this is for educational purposes only. Anything is in the spirit of education, not investment advice. I'm a doctor, not a broker. And I'm not affiliated with any software vendor or trading company. I demonstrate and use tools that I pay for, have paid for, and I'm not limited by any one program to use or not. I post these in multiple places, including the HGSI board, mostly because I get a lot of questions or a lot of requests for me to post them there from different people that use that software. But I also post it other places in addition. I purposefully turn off my desktop or hide my icon so I don't get stuck talking about a lot of programs. I have a lot of programs. I like to do real time during the day, so I use either TradeStation or Thinkorswim, mostly both because I've invested in both of them for some personalized trading systems. I use an analysis tool. Intraday, I use TradeStation or Thinkorswim. Sometimes when I want to do some really quick scans and not interrupt my real-time trading platform, I'll actually go to EdgeRater now, which in addition to being a cool program for market timing, also has an update during the day so you can take a snapshot. For example, looking at green candle lows, red candle highs, intraday. I'm still a fan of seasonal analysis. Probably won't get to that today, whether it's Magenta Trader or Best Choice. I think it becomes sort of user's choice. And a lot of what I've learned from these two guys, well, actually, Ian Woodward and Ron Brown from Woodward and Brown Investing, and much of what I talk about on my programs, I have learned from them. They sell a newsletter which comes with a video and then a live video presentation on a monthly basis. When you look at what some people in the market charge, they charge about $200 a month inclusive, excuse me, $200 a year. Sorry, not a month. But so for about 12 bucks, or not even, for about $17 a month, give or take, you get an hour live with them, a video, and a newsletter. Ron puts out weekend reviews, usually how to use the program more than what the market is doing, and I'll show you where to find those. Ron has a fee service of daily market updates, and Ian has a wonderful blog, which he likes to make us pay attention to potential market-changing moves. I'm not going to spend much time here. You can hit the pause button, but these are a lot of different folks that have influenced my trading style. And what I really liked, what I heard from the guy up in the lower-hand corner is he would always say, Jeff, I'm not a guru. That's Ian Woodward, and I think he is a guru. But regardless of that, his comment was that he teaches you to be your own guru, and I think that's probably the best advice you could give somebody, is for them to understand what they're doing and to develop their own trading philosophy and trading systems. I talk a lot about a buy list or a sell list. It's a list of stocks that I will look at during the market. I put them into my real-time trading systems, and then I look for signals to trigger once the market opens. It is about a little bit short of 3 o'clock in the afternoon on Sunday. I have no idea what the futures will do tomorrow. So how do I know what I'm going to do with my purchases? I don't know if the market's up or down or sideways. But I like to take an 8,000 stock library and will it down to about 40 or 50 to be watching as the market opens, and then add and subtract to those based upon some real-time scans. As usual, I'll go through a little bit of my take on where the market is. We'll look at some top-down investing tricks, try and identify some stocks and leaders, show you a couple of shortcuts that I use routinely with HGSI, and typically I integrate with other programs, some not on all programs that I do, not all webinars have all programs, and then I may look at some stocks at the end, and I do not want to go more than an hour today. As I've mentioned, Ian on the left and Ron on the right are influential for me, and just to give you an idea of where to find these two guys, if you go into your Internet Explorer or equivalent, actually, I learned a long time ago that I probably ought to, not that I, oh, here it is. So I go into HGSI, which is www.highgrowthstock.com. You'll see a splash page. There's not a lot on this splash page, except right here you can get a 30-day free trial, no credit card required. If you download the software, it is very powerful, but you'll have to do some movies or get some training because it's not as intuitive as you might expect. But the power underneath the engine is pretty darn exciting. Under products, you can find seminars, and coming up March 23rd through 25th in Southern California will be the next live meeting put on by Ron and Ian. Great values, highly recommend it. You can read about it on the website. If you go under reports, Ron Brown has his reports that come out on most weeks. He's been pretty prolific of late, either download or to play. He talks a lot about how to use the program, and he introduces us to new things that are constantly being improved and upgraded within HGSI. If you look under my name, all these reviews are posted, and I do think there's value in them even after the fact because I try and look at how I use different tools to do top-down investing, and that's my style. And then over here under blog, and Ian just updated one last evening, just a great teacher and undeclared guru, and he has some great ideas about where this market might be going. But he has also taught us that, just as I don't know what the market's going to do tomorrow, neither does he. And he always wants us to plan for a good, a bad, and a neutral scenario, or the three roads. And in his blog, which I highly recommend, which is free, he talks about a high, middle, and a low road scenario. Well, enough of that. Let's jump into the market, and let's take a look at how things are going. For those who've been here before, I do bear all to some extent, and I like to look at, for example, how the market was this past week for me. So actually, I need to go find something. So let me show my icons real quickly. And I want my GPA. That's probably in that thing. All right. Let me hide my icons. This is actually, for those who've seen my other view of the water, this is the back window in my office in my condo. Somewhere over here on the left, in the daytime, you can make out the corner of Central Park. And here is the Empire State Building, which was kind of cool during Christmas time because every day you had no idea what to expect from a light show, as they put on some expensive lights and like to show them off. So one of the things that you can do with HGSI is called a group performance analysis. And I'm going to make this a little bit easier for you to read. I'm making it bigger. And what the group performance analysis does, it allows you to take your various watch lists and then pick a start day and a stop date. So here's starting Friday, end of day on the 18th, and running through the 25th, end of day. And what I did with it is that I take each of my watch groups, and I like to see how my watch groups performed to try and get an understanding of what's leading the market, how's the market doing, et cetera. So I include in there in yellow the HGS 100, the IBD 50, my holdings, and the S&P 500. So what did I learn? First thing is, of my different watch lists, almost everything is black. So only 3 out of the groups did not do well. One of them had 2 stocks, so we're going to ignore that one. But my shorts from pivots, with person pivots, those stocks underperformed and were down a little bit for the week. Darvis Bears, which is a search I do in OmniTrader, was down for the week. The S&P 500 was up 1.14%. I had 2-to-1 positive stocks based upon what was in my portfolio on Friday last week, which may not be what's in my portfolio Friday this week. And usually I underperform in a very bullish market because I do have some shorts, although I have a lot less shorts. So as we've been running up, I've been buying some puts and protection, so that mitigates some of my gains. And this also assumes that all these lists, nothing happened during the week and the same stocks are in as you started. So you can see I was a median maker right at 1.15%. The IBD 50, for all intents and purposes, the same at 1.04. And the HGS 100, interestingly, way outperformed at 2.29%. So this tells me that if I'm a high-growth stock investor, that this was a good week to be in the market. Rising estimates during earnings seasons, probably not a shocker that stocks that had rising estimates had a good week. Leaders, pocket pivots, as you can see, over 3% for both of them. Breakouts seem to be working. We'll talk about one of the shortcuts I use is called sprinters. I think David Gallardi was instrumental in that. Ian Point scores, another one I like to look at, also outperforming the market. My buy picks from last week, had I bought all of them in an equal dollar value, would have been up 2.3%. Looks like I would have been better off trading in my portfolio. The green candle lows, folks know I like to look at those. We're up nearly 2%, 6-to-1 from Sunday. And if you think back the last couple of times I've gone through, those Sunday green candle lows usually are about 85% up for the week and usually outperform. Interestingly, the red candle highs from Sunday really continue to go. I guess this is telling me this is just a cha-cha-cha market. 24 out of 25 stocks that had what appeared to be topping patterns on Sunday flew right through those and continued to go up over 2%. So all this tells me is very strong market. So let me shut that one down, see what else I got to look at. Obviously, I want to take a look at the market itself. So I'm going to go into HGSI. And by the way, I keep trying different computers and different resolutions, trying to find one where it's actually usable from your perspective. And let's go into Woodward & Brown user groups. And let's go into Major Markets Plus. And then for a view, I would go into your program under HGSI Strategies, Woodward & Brown, Reference Library, and I look for the top-down approach, top-down analysis, and I look at T1. And this is what I like to look at the markets with, searching on raw combo, because what this is doing is taking out 20 major markets, major indices as you can see, and it's ranking them by a combo rank. In the top-down analysis, this is a purely technical ranking system, and it's looking at 1-day change, 5-day change, 13-day force, and accumulation and distribution. So it's all technical, heavily weighted for near term, but is going back and giving it a 2 or 3 week input. Now, I'm going to take a quick audible for those that may have recently downloaded the program. You need to make sure that you go into Support, Learning Center, Add-ons, and that you run both these programs that are dated the 14th for the updated filters and combos and charting and the user groups. This way you'll have the same basic things that I'm showing you today. Also under reports, under support rather, is information about the forum on Yahoo, the users group. And there are a lot of smart people that you can, during the day, get some nice stock tips and market tips from. I think we're probably more about the market and maybe sector rotation than individual stock picks in this product and in this board. So let's take a look at what's working and what's not working. Now, this is sort of a continued theme that we've been seeing, and that small cap stocks have been doing very well. And you could see here the NYSE, which is sort of a large blend of over 4,000 stocks, big, small, or little, by this ranking module, is leading. NASDAQ right up behind small caps. And what's trailing has been silver, gold, and some of the bigger stocks, like the S&P and NASDAQ 100 and the dollar. So let's take a look at some of these and get some ideas. I can click on one-day change. You can see volatility was up on Friday, up 1.6%. It's 5-day change, and let me, again, let me do a quick thing here. Everything is so customizable in this program. It's probably why I love it so much. On the 5-day change, it was down 5%, you could see. So what was moving on Friday was volatility, the mid-caps, and the NASDAQ. What wasn't working was bonds, silver and gold, and dollar, and commodities. Over the 5 days, gasoline, transports, interesting, transports and gasoline leading the way. And lagging over 5 days was volatility, gold, and silver. So clearly the metals have underperformed this week. Those who've been here before know I like to look at many of these major indices. So let's start with the NYSE. So let me just get you acquainted with what I like to look at when I look at an indice. And I've made a change in my charting my slides for this week. So I got to fix this, take out my fast weekly, and shut that down. All right, so we have a number of proprietary indicators in HGSI. On the board are some old PowerPoints of mine. If people email me with questions, I'll give them some. I'm happy to answer them. The bongos are a momentum indicator that are built upon 3 different Wilder RSIs and a price. So let's see if I can find the bongos here. They're here. I just got to remember where I put them. Okay. So to become a yes for daily, weekly, and it's fractal, it can be on intraday. You have to close over the 9-period moving average and also have your Wilder RSIs line up in this direction. The first time both of these happen, you become a bongo yes. First time both the opposite happens, you become a bongo down or no. What we know from multiple years of watching this is that they are great indicators, perhaps lagging on the weekly, of showing you the trend of the market. And if you find a long green stretch and find red on the daily when the green is weekly, it indicates periods of pullbacks, which could be times to get back into an instrument. Accumulation distribution in the middle. And then we have a long and a short acting force index. The force index comes from Dr. Alexander Elder, and it looks at volume times change, plots it, and then puts a 2-day and 13-day exponential moving average. We'll talk about it later. And you could see, like the bongos, you get long stretches of green in the short-acting one, the long-acting one, with the short-acting one going red during times of pullbacks. And I think, go back to that PowerPoint. If you look up a guy named John A. Sarkett in the program Option Wizard, he goes through his trading rules, and if you come through to our HGSI meeting, you'll find that each of these are actually built into the software. So I'm looking for green. Green is good. Now, one of the super indicators that Ian has created and Ron is called the high jump, which I refer to as my ATM machine because it tells me when to take my money out. And what this does is it takes the price and measures the difference between the closing price and the 17, the closing price and the 50, and the closing price and the 200-day moving average. Plots it on a scale. Now the scale, unfortunately, is not the same across different stocks. It shows that number, how it compares versus numbers in the past. And I know that when I hit the max amount that I've done in quite some time, that it's a reversal signal. And here we had a shooting star, the evening star in the NYSE, and led to a pretty substantial pullback. So when I see the high jump bar peaking, I get nervous. And if you notice what's going on in the NYSE, it's peaking. Now this works on stocks, it works on bonds, and I find that it's enough to make me tighten my stops, enough to keep me from going into an extended stock. But as you can see here, it can move across the high bar or the high amount for a period of time. And often you don't get a pullback. What you might see is it goes sideways and lets the moving averages catch up. I use candles, that's self-explanatory. The purple or magenta is an 8-day exponential. The green is a 17-day simple. The blue is a 50-day simple. The red is a 200. This is how you want to lie up if you are a bull. You want to see the short ones on top of the longer and all of them pointing up. Very strong market, as you can see in the NYSE and as you know from your portfolio. You'll see blue bars painting here occasionally and pink bars, and these are pocket pivots. The blue are up, the pink are down. Now, the pinks, I'm not sure, are as validated by Morales and Katcher, the proponents of the pocket pivots, who I'll throw out a shameless plug for these guys. And they're actually, I even say, friends now. We've had broke bread and had some nice conversations. They just came out with a new book, In the Trading Cockpit with the O'Neill Disciples. The previous book is, should go on your list as one of your trading Bibles with O'Neill's and other books. So we've actually, with their help, have built pocket pivots into HGSI. So pink is down, blue is up. And then down here we have a number of other indicators. You have volume and two. Why do you have two rows of volume? Just to make my life easier in case I can't read what's going on behind them. In the middle bar here, I've closed off the top one a lot. We're not going to talk about it today. You see reds and greens. These are called Eurekas on the green, and Phoenix on the red. And these are very much the HGSI users' follow-through days. And they tell us to lift up our neck, our heads, stiffen our neck, and get interested in the market. O'Neill has well publicized the value of follow-through days. These are different, but to us they're analogous. And then on the lower bar, so one thing about these Eurekas and Phoenixes before I jump off of them, they only apply to the NYSE, but they give us a hint of what the market is doing. So when you change stocks or indicators, they're going to still be the same based upon the NYSE. And lastly, Ian uses a lot of Masters stuff, including John Bollinger. And he's created an indicator called the kahunas, which are really based upon the change in percent B. And so if you think about a Bollinger Band having an upper and a lower band, we know that the vast majority of the time the stocks oscillate between those bands. In a bull market, between the middle and the upper are between 0.5 and 1, and a bear market between the middle and the lower, 0 and 0.5. And when you get above the band for too long or below the bands, you're going to snap back into the middle. Now, it turns out that how much you move percentage-wise within the bands may be meaningful. And through Ian and Ron's research, they found that a move of 40%, which we call a big kahuna, up in blue or down in red, is a pretty profound day, and it really shows a change in character of your instrument. And that a 24% move, although it occurs more common, also might be very meaningful. We put that together in a chart. The only other thing I've added here is some of you may have participated in the Morales and Katcher boot camp that they've been doing for no cost on the web, reviewing bio gap-ups, pocket pivots, etc. So I've actually put into my charts where it'll paint green if there's a viable gap-up. So the NYSE, how strong is strong? It's strong. If you think about it, here's where it topped. It pulled back. Here's my green candle low day. 43 periods, about 8%. And from that day, it's now gone up 46 periods and getting up to about 14%. So, at some point this market will correct, and it's probably going to be sooner or later. But I don't know what day, neither do you, unless you really are a good guru. So you got to trade the market we have, and you need to look for reversal signals. You need to look for red candle highs. You need to look at big volume gains or a blow-off top, big volume losses, or a blow-off top with big gains and perhaps on diminishing volume to get an idea that the tenor of this market is changing. That's the NYSE. Let's take a look at the NASDAQ. I think you're going to see a broken record. I'm not going to spend much time looking at the indices because they all look the same. You've now broken above. Everything's pointing up in the right order of things. Everything is green, not quite near the high. And if you look again, what happened with the high jump? Went sideways for a while, ultimately pulled back. But that high jump is a great signal for looking at tops. Now you can look at this and wonder, is it a signal for the bottoms? Not as comfortable saying that, but it's something that I'm certainly researching, among others. Other thing on this I forgot to mention is this thing called the bingo. If you come to the meeting, you'll get to see Ian do his bingo, bongo, bango dance. And a bingo looks at RSI's percent B and accumulation distribution. And when you see an RSI 19 less than 33, a percent B less than 0.1, and an AD percent less than 0, you're looking at a very oversold instrument. So what we might want to do is look for a series of bingos occurring, signifying a bottom, and then looking for those eurekas to come in, showing a follow-through day and a turnaround. So when you put it all together, these are some very powerful tools. So NASDAQ looks strong, not much to say there. Small caps better look strong, and do they not look strong? Let's just draw this and get an idea of how strong they are. So again, we had our peak. We pulled back down here. And so 43 periods, we lost 12%, so a little bit more than the NYSE. And now in 46 periods, we're up 18%. So we've taken out multi-year highs on all the major indices. Small caps appear to be leading the way still, which I guess is not a surprise since we are in January and they could be in the January effect. We look at the S&P 500, you look at some bigger stocks. Not to say that by itself this isn't extremely strong. However, when you start comparing this with the 16% or so movement we saw in the small cap 600, you see a very big move, but it's 12% over 46 days. So nothing to say but good stuff here. Again, take a look at the impact of that high jump bar, calling a high in the market, and we're not there yet, but we certainly are close. Other things of note in this group to look at, we can look at volatility, and boy, volatility is just plain old sick. Now, we are at a very big low, multi-year low. This is the kind of place where you'd expect the market to start to reverse, but every time it looks like it gets reversed, it comes right back down, and even when it fakes us out and gets above that 200-day moving average, it comes right back down and loses it. And there's a lot of resistance. All these moving averages can function as resistance to prevent volatility from breaking out, but that could be a clue of a change in tenure, and we did have a positive VIX on Friday. Dollar, well, you know the dollar's weak because the euro is so strong, and you can see the dollar also has been failing here at the 200-day moving average, failed at the 50, and it's been beaten up substantially, probably helping to fuel the rise in the market that we've seen. So I think this, and we'll take a look at gold and silver, and then we'll move on. Gold can't get out of its own way. It lost the 200-day moving average on Friday. And if you compare this with those major market indexes, you've got the 17 below the 50 and the 8 below the 50. So you flipped those shorter acting moving averages down. The price is below the 200-day moving average. And we see all red above. So weakness in gold, risk on, I guess, and I didn't mean to show you that one, not that there's anything bad to show you. And then lastly, silver, perhaps not as trashed as gold, but pretty darn close. It's still above the 200-day moving average, which I guess gets it a little bit of credit. So market is strong, it's extended. I'm not sure we learned anything over that last 5 minutes except to validate that we are continuing an up move. We're not at the high jump yet on any of the major indices. Small caps are outperforming as we'd expected, the January effect. And the VIX is at a point where one might look for a reversal. The other thing that I'm starting to expect after I looked at stocks is that you're going to start to see analyst downgrades coming in. January's over, almost over. And I expect that, well, there's so many extended stocks out there that it's almost natural that the analysts are going to come out and downgrade based upon valuation, which you know, a lot of the stocks that are breaking out are at risk of seeing that happen. So just something to keep in mind that I've learned over a few days doing this stuff. So once I've got a sense of the market, sometimes I like to look at TradeStation and just get a sense of using some of the elder indicators of what the NASDAQ is looking like. And you can see the NASDAQ, and this goes back to just August, run up in the summer into October, a substantial pullback as we've talked about, a reversal day here, and a nice run up. So a couple things about elder, and talk about some of the continued concerns I have about this market. One thing about elder is that he uses colors to denote impulses in the market. Green is buy. You can either buy or hold. Red is a sell. Well, it says you can sell or you can hold, but you can't buy. It's not a signal. It just tells you what you're allowed to do. And blue allows you to do whatever you want. He uses an envelope, and typically with envelopes, when stocks or indices get below that envelope, they like to get back in. As you could see, it reversed up there, different than a Bollinger. And then what I have here, and I guess I could probably leave it intact, although maybe move it a little bit, is this. I put this on several weeks ago to denote, I'm just going to lose it. Let's see if I can put that one in. One of the concerns that I have with this market, as with anybody else that you'd be listening to, is are we seeing some divergences? And elder is all about divergences. And you notice from this peak to this peak, the market has gone up, yet the MACD has not reached a new peak. So a clear MACD divergence, we've seen this over the last several weeks, which would suggest some deceleration in the growth of this market and some type of a setup coming into the market that could lead to some type of a pullback. I've been saying that for weeks, and it's clearly an earlier one, but you could see the power of that MACD is getting less and less and less despite the market holding up. Weekly and monthly, very strong, are green. So enough about the market. What about who's leading the market? What are the leading industries? So with the top-down view, which is not what we're going to spend any time on right now, you can see there's 146 different sectors that are being used or industries being looked at, and this is giving about a 3-week performance. I don't care about 3 weeks. I know it's working yesterday and the day before. So then I go down to a different view, and I look at the force view, elder force, and I want a 2-day exponential moving average up. So remember, this is looking at volume times today's close minus yesterday's close, plotted with a 2-day and a 13-day exponential average. So a force number will be driven either by the volume or how big the change was. If you think about it, volume is a much bigger driver. So the more volume, the more force. So things with huge volume often end up at the top. So as you could see here, those 146 becomes 83, which is a very big number. And these in front of you are the sectors that are leading the market right now. So what I like to do as part of my top-down investing approach, since I've already defined that this is a strong market, and I don't want to short new stocks in a strong market, although since I'm worried about topping, I might be lightening up some and looking at potential plays to the downside with puts and contras when I get that signal, but not yet. Let's take a look at the top 10 sectors or 10 industries and see if we can't find any ponies to ride. Internet retailing, bet you can figure out what's going to be in this one. What a week for Netflix. And for those that are Web 99 users on Magenta, George Lee told us to buy calls on Netflix because it's one that typically has a very strong seasonality. And you could see the huge move. Now, as an HGSI user, I didn't need seasonality on this one, and I'll tell you why. A couple of things are on this chart that could have gotten you in a relatively easy period of time. If we go back here in December, we had a bullish engulfing, looks like a bullish engulfing pattern, close to it, on a pocket pivot, a kahuna, and huge volume. If you bought on this day and you set your close below that 17-day moving average, you probably have still in the stock. Okay? You had kahunas occurring off of pullbacks here. And then if you go to Wednesday before the move, intraday you had huge volume coming into the stock, a kahuna, and then before that you had a pocket pivot. So you had a lot of signals telling you that this was a strong play. And look at this volume coming in on Wednesday. Certainly a signal the day before the market popped. And now, even if you bought it after it gapped open on Thursday, which obviously would have been a little bit more risky, you still had a great return. So a huge week from Netflix, including a Bible gap up on Thursday. Now, this is ripe for a pullback, or at least a pause here as it's hitting the high jump bar directly. And it's had a 70% move in 2 days or 3 days. Wow. Priceline. Priceline has been in a sort of it's been in a pullback. So if you look at it under a weekly perspective, it's been a great stock. This is back about 450. Now it's at 720. But it's struggled since April of last year. It's on a weekly chart forming a saucer pattern. And whether it's driven by Netflix, whether it's whatever the cause is, on Friday, huge day with a kahuna on volume, everything is green. And I can't remember if the earnings came out or not, so if you right-click in the chart, you get more info from the web, and you can perhaps go look at FinViz or whatever your favorite site is. No earnings came out, probably being driven then by the excitement with Netflix. So that's two stocks in this sector. Well, look at Amazon and Facebook. This has just been a super strong industry. Here's Amazon, pocket pivots on Thursday and Friday. Not near the top on its high jump, so potentially still has room, green. Big volume coming in on Friday, extremely strong. This is a good seasonality time for Amazon. And then you have Facebook. And Facebook, despite all the hype and the hype around its failed launch, it's been doing pretty well over the last several weeks. Gapped up above, through a squeeze here in the middle of November. And really off of this period of time around 22, it's had a nice steady run up. You can see the group strength. Now, I'm going to do another audible here. And let's take a look at Magenta and see if I can't show you. Of course, my data's probably expired because I have, sometime this month they turn off data. I got to re-up my data, but let's see. That would be embarrassing. Now, there are a handful of stocks, no, not a handful, there's a lot of stocks that have they behave well with seasonals. Here's Netflix. So what do you see on Netflix there? Okay, what do I see? I see a stock that, in fact, let me just make this a little bit easier for me. All right. I see a stock that's been trading in a range. Okay. In fact, it even got out of the range a little bit. And in a time, let me put the relative current bar. All right. Here's the seasonality for Netflix. Beginning of January, Netflix over the last 5 years has trended down. But in green here, what I see is that there's a major change that occurs. And what we have, I'm going to set it to even a bigger block. I'll set it to 20-day periods. And what I can show you is that we knew with seasonality that this was a great time to buy Netflix. It's the bottom of a channel, so it's probably going to come back into the channel that it's been following. And if you look at the performance historically from January 12th to February 18th, it's up 9 out of 10 years, and the up average has been 16.7%, and the down average was 0.12%. If you look at from February 18th to March 15th, it's up 100%. It's up 50-50, 5 times up, 5 times down, up 5.89% average up, 6.41% average down. If I just bought Netflix today over the next 10 days, you start to get performance. So this stock, this is the time of year. You can see the big performance over the next, average performance over the next 10 days is 35%, with the range of 51.74 up to minus 2.62 down. So is this a bullish time of year to buy Netflix? Absolutely. If you knew this information, might you have gone out and when you saw the stock pulling back earlier in the week, might this have been a time to jump in? I think so. So you're in a trend up in a channel, and then you add on the seasonality, and it really makes you. Of course, it's not going to do that today for me right now. So go back to you add in this seasonality, and what a great thing to jump on. So seasonality is not voodoo. It doesn't work in all stocks. Magenta Trader, Best Choice, they have scanners and other things in to try and help you find winners. And people like George Lee are great teachers when it comes to seasonality. All right, so Internet services, or retail, looking good. System Software Index, who might this be? Microsoft, kind of interesting to see. Now, I think part of why Microsoft is here, frankly, well, it's in a little bit of a uptrend. For the last couple of weeks, it's below the 200-day moving average. Not the kind of stock I want to buy, although, is this an attractive time to buy Microsoft? I don't know. Everything is green. It pays a bit of a dividend. Let's open up. Oops, wrong. Not much earnings per share growth, but they're in a cycle refresh, multiple of 10, and pays a 3.3% dividend. Why is Microsoft in this analysis? Why did it come up high on a force index? And this is one of the flaws, I think, of force index, or the reality of force index. Hold on a sec. I'm looking for something, and I keep hitting the wrong button. Here it is. The volume of 81 million. How many different instruments? Well, there's quite a few, but not that many have 81 million shares. So, yeah, maybe it's an early buy, still in a downtrend. Not a lot of growth, pays a nice dividend. VMware kind of flatlined for quite some time, broke above the 200-day moving average. Everything turned green. These aren't really exciting me in this group. They've got to be driven by volume, and the volume here is 2.8 million. So I'm going to skip this. I looked at a lot of stocks today, and we're going to go on to the next group. Biotech. People who've been on my calls know I love biotech, and there's my favorite biotech stock on top. I've had a couple good calls on this one this year. Analysts are all behind the stock. Earnings are out. Earnings were not as good as I would have thought they would have been, considering that they came out and said that they made their numbers. What's interesting is they actually missed their number a little bit on sales of their key product, Revlimid, and they had a little bit of a micro pullback, $2 on a $100 stock, and then Friday you've got a bullish engulfing pattern, a pocket pivot, everything turned green. Here's one that I think runs again. I like Celgene. The next one is Sarepta. I don't know this guy at all. Maybe Ghilardi can chime in on the board. This would have to be a story for me to buy because it's pulled back. There's a squeeze here on the 17 and the 50-day moving average. I had a kahuna in volume come on Friday, mostly green up top, but it doesn't make any money. It's a tiddler. I can't recommend this stock. Gilead has been a leader like Celgene. It's got some big earnings coming into the stock, a leader in the hepatitis C world and HIV world, clearly a gorilla in biotech and one of the best stocks in biotech, especially if it's got earnings coming back in. Amgen had pulled back on earnings, had a number of buy recommendations coming in. I'm not sure it's my favorite one of the list. Let me see if there's anything else here I want to point out. Pharmacyclics, I've presented this thing a lot, and every time it's pulled back to the 50, I've said to buy. We had a deep pullback here. It looks like it's running again. It's actually breaking out to all-time highs. They do not have a drug on the market yet. They have a number of things that they've licensed to others that are going through, and they've got a hot leukemia drug. Over the past year or so, these companies run up until the drug gets approved. Once it gets approved, they struggle. Case in point would be Ariad, which I think I know why they were struggling is because people knew they'd come out with a secondary. Might be an interesting thing to nibble here. It's living on its 200-day moving average, which is trending up. Their secondary is priced. It's in the market already. I think they've got a great new leader there, a guy named Jim Daly, who came over from Amgen. I think that this company is primed to move. And what a safe place to buy a stock living on the 200-day moving average. What else do I like in here? There's a lot that I like in biotech. If you want to buy an expensive stock that gives you pullback opportunities, here's your pullback opportunity. Number of different products on the market. It's not cheap. It's got huge growth and trades at a multiple of 80 and a growth rate that's much higher. And this is Regeneron, which is pulled back to the 50-day moving average. A number of marketed drugs. It's an expensive stock, but probably not when you consider its growth rate. And I think that's enough to point out. Oh, Onyx. Here's another one that's setting up perhaps at a good buy point. In the past, 50, also known as 50 as free parking in Ian Woodward lingo, has been a nice time to get into this stock. You could see you had a point here where you trigger the high jump. It went sideways along the moving averages to catch up. You trigger the high jump. It pulled back a little bit, but mostly went sideways. High jump is low. Group is strong. I think you've got a stock that's giving you a nice buy point, pulled back to the 50-day moving average. Enough of my biotech favorites. We'll go back. Semiconductors. Always wonder when Cirrus Logic. I know Cree had some good earnings come out. 10% rise on Cirrus on Friday. This is a stock that's been getting whacked because of Apple. I believe they had earnings come out. Let's check. Why did they rebound with a vengeance? So they had the earnings count. Revenue in the fourth quarter, up 153, shattering the estimate. $1.64 per share, blowing out the guess of 141. So, Apple may continue to weigh on this stock. I don't love stocks below the 200-day moving average. It has a tendency to form resistance. On the way up, it's a nice floor. On the way, when you've been trashed, it becomes resistance. Great earnings per share. Kahuna, huge volume. You know what? I resisted this when I looked at it before. I'm going to watch this one closely and put it into my trading programs. I'd be nervous about getting through that 200-day moving average on the first time, but if it does, this thing has got power to grow. So I kind of like Cirrus here. Cree had some good numbers come in. You could see what happens. As we saw when I looked at the weekly numbers, rising earnings estimates, beating earnings gives you a big boost. You're right up at the high jump. Everything is green. Maximum Integrated Products, don't know much about this. Actually makes money. Nice move up this week as well. Communications equipment. Juniper is one that's been beaten up. I'm just going to look at the top one here and go down the list. If you look at Juniper more than just over 6 months, you can see that Juniper has been a fallen angel, and it's still long below its 200 weekly moving average. But that said, everything has turned green. It broke up above the 200 daily moving average, which I'd like to see Sirius do. It held, and it's running here all green. It's got some earnings coming into the chart, big volume of Kahuna. I think that's an interesting looking chart, probably worth reading more about what's going on with the company. Next one down the list, application software, and we're going to see, number 2 and number 3 I've looked at already for the week. Informatic, well, it had Kahuna, giant volume, broke above the 200, everything green, and it's a viable gap up. So this suggests to me that either they got an offer to buy them or earnings came out. So we'll look at FinViz. Beating estimates, all right? Great thing to do at earnings time. So you have a stock that's been in a downtrend. Big day here. Broke above, viable gap up, everything green. I think this is interesting. I don't like downtrends, but I like people that beat their estimates. Is this a shooting star-ish looking pattern? I don't think it qualifies. I think the body's too big. It certainly closed down after it gapped up for the day, but that's still a pretty big move of 10%. The reason why the volume is red is because it closed lower than it opened, but this was a very bullish day in Informatica. Autodesk, hold standby, big gap up today, on Friday rather as well. Healthier looking, already in an uptrend, everything green, makes money, but with some mediocre earnings per share growth. And is this up because of, it had an upgrade, high volume rising. I don't see it up on earnings, so it might be something interesting to read about. And then the other one here, which I did look at, is CompuWare, which I think had earnings and then some discussion about a leverage buyout. Base, huge update, pocket pivot, viable gap up. Kahuna, all mostly green. Don't love the fundamentals, but might be worth looking at that one as well. Computer storage and peripherals, well, here we go, Seagate. Not this one, okay. There's Seagate and Western Digital are down the way. Synaptics, let's look at Synaptics, SanDisk, and Seagate out of this group. My guess is earnings. Isn't this beautiful? Right click, go to web, it opens up the website, upgraded, beats on top and bottom line, so earnings driving this puppy here. 5 will gap up, big kahuna, gigantic volume, everything turned green. I don't like the forward earnings per share growth, but that's just me. Seagate, even though its forward earnings growth has slowed down, Seagate had a small little pullback on Wednesday, looks like, and started running again Thursday and Friday. Certainly a leader, not at the top on the high jump. Interestingly, when its earnings were so powerful, the stock was pulling back. Trades at a dinky multiple, as you can see, of less than 5 and pays a 4% dividend. Western Digital might as well be their cousin because they have a very similar story and pattern. And SanDisk, these are the guys that make the memory sticks. They gave you a pullback opportunity on Wednesday or Tuesday or Wednesday down to that 17, running again, makes money. When you consider all the digital devices, cameras and things out there, it's certainly been a leader and probably continues that way. Diversified financials, well, JP, look at the volume here. 23 million, 164 million, and 37 million. These guys are always at the top. Interestingly, JP Morgan has moved from number 3 or 4 up to number 1, and you could see what a nice lower left, upper right hand move, sort of stealthy there. Not the same type of move that we saw in Bank of America. Earnings per share growth is positive. 2.5% dividend, pays still has a small multiple at 9.1. And you compare that with a bigger mover in Bank of America, probably because it was more trashed, 7.5 up to 13, up to 12. So really over a 50% move. But really a lot of action going on in both of these stocks. We'll look at home building and computer hardware, and then we'll look to the downside. I love this group. I hope you have several of these or some of the pinball stocks. So we'll look at the first 2, maybe first 3 or 4, and then I'll throw out some pinball stocks for you. Lower left, upper right, we haven't seen earnings per share growth like this anywhere else. Everything says this industry continues to heal. You've got to be long something in this sector. Here's Pulte. And look at the earnings per share growth. And memories, don't forget, it trades at a much smaller multiple at 45. Here's Toll Brothers. Have pulled back, running again. Everything's green. Great earnings per share growth. KB Home's a cheap one. That's a recent turnaround. You see the negative earnings per share growth now turning positive. And Lennar, another lower left to upper right. Here's the pinball stocks that I like. USG, US Gypsum. Gypsum is, I guess, used. Is it used in the wall board? But as you can see, very powerful looking there. Sherwin-Williams. You got to paint that particle board or wall boards after you put them up. PPG. Specialty chemicals involved in that paint. I'm trying to remember all the ones that I saw today. There's so many stocks that are nice plays off of this thing. Let's see, what else did I want to show you here? EXP, you need cement for your driveway. Eagle Materials. You want a small house builder, SPF. But if I wasn't doing these shows, I wouldn't even know that SPF was actually a builder. We're getting up on 50 minutes, so I'm going to try and not go crazy here. Uh-oh. What did I do wrong? Let's see. S. Huh. We'll figure that one out later. Here's Standard Pacific, smaller home builder right here. And the other one I wanted to point out was LPX. So nice earnings per share growth coming into this stock. And then LPX, I have no idea why it's doing that, but LPX, Louisiana Pacific, makes some of the wood used in these houses. I love this sector. In fact, I'm going to build my own little housing index looking at the pinball stocks and the leading housing to look for signs of a top and a rollover because I'm now heavily leveraged in this group. All right, back to my warehouse view. Hope you like the way I do this. There are many different ways of doing things. This is just my style. So we've looked at essentially the top 10. We'll make it complete by looking at computer hardware, which may have some silly things in it like, well, I'm not just kidding when I say silly, Dell and others. Let's take a look. Right click, change index group. You notice what's not here is Apple. Let's take a quick look at Dell. A lot of talk about a takeover in Dell. That's probably driven this. Everything is green, broken above the 200-day moving average. Earnings continue to contract. I'm not sure there's anything here except for the speculation of a buyout. If the 2-day up is what's doing well, then the 2-day down must be the industries that are doing poorly. And we're not to spend any time here. Gold and metals. Interesting, the mortgages have pulled back. Coal, aluminum, etc. So that's where the weakness is in the market. So what I've done is I've now gone through from a top-down approach, and earlier this weekend I did my bottoms view, and I try and get a sense of the market and look at hundreds of charts, which is not something I recommend for you to play at home. Fortunately, I have a very understanding wife who knows that I disappear on Saturday and Sunday to look at charts, which is kind of what I like to do. So basically, here's a list. Let's see if there's anything else in the list I wanted to point out today. Go down to scorecard. So these are the 50 or so stocks that showed up for me today that got me excited. Now, we've looked at most of those. Terex is another Bible gap up, and I think this is worth taking a look at as well. Pull back to the 17, had gone sideways for the month of January. Earnings came in, big kahuna, gigantic volume, everything turned green, Bible gap up, good earnings per share growth, trades at a multiple of 16. This is one that probably goes near the top of my buy list for tomorrow, considering if the market works well. So if I want to believe that these represent some of the best looking charts in the market, I'm going to rank them by industry. And let's see how these line up with what we've looked at before, and are there other places to look at. Biotech, we looked at Celgene, Pharmacyclics, and Regeneron. Other companies that are pinballs off of housing, Lennox, you got to put appliances into that house. Lower left, upper right, not extended too much, great earnings per share growth. You want to build a deck, so you probably want to get some Trex. Lower left, upper right, everything is green, although they stumbled on earnings here. This must be a bad quarter because it was actually growth in the quarter. And we already looked at USG. So those pinball stocks off of housing are all strong, just like housing is. We looked at Seagate. There's something's going on here. If you notice, I've got 5 stocks that I highlighted in construction, farm, and machinery, followed by construction materials, Eagle, which plays off on the houses. Is there something going on here? Let me look at them very quickly. But to me, this might be an early wolf pack of a group about to make a move. Federal Signal Corporation, Bible gap up, traded up, closed up for the day, but below its open, therefore it's red. Had a kahuna on Friday, mostly green here. Great earnings per share growth coming into the stock, trades at a multiple much lower than its earnings per share, and they are involved in construction and farm machinery and heavy trucks. Don't know anything about Federal Signal Corporation, but it's in an uptrend, had based, looks like it wants to run. Manitowoc is a construction and farm machinery, heavy trucks. They make machinery and equipment. They've had a nice little run from 10 up to 17. I think they have more to go. Look at this earnings per share coming into the stock. trades at a multiple of 27, pays a small dividend. Navistar, I put this in my bottom fish, but it's changed its colors. Everything is green, big kahuna, volume coming into the stock, broke above the 200-day. I hate the earnings. Don't know anything about the company. It's been going nowhere for months. It's come from a much bigger number. And when I see the stock that has based break above that 200-day moving average on volume with a big kahuna, I pay attention. Now, cast my eyes up there, and I'm not sure what that means on a stock that's underneath the 200-day. So I'm going to ignore the high jump, because I'm sure if I go back a long time ago in the stock, the high jump was a lot different than it is today, and it's much more meaningful when the price when you're in an uptrend. So, not a great looking chart, but one that's interesting for a turnaround. Terex, we just looked at in this group, perhaps my favorite chart of the day. I thought these guys were a bank, but they're not. Wabash, look at that earnings per share growth. Look at the multiple of 18, growing at 180, 160, 1,400 in a sector with some interest. Trucks, trailers, gotta like this. So when I see a number of things showing up in the same sector, I get excited. Home building, we hit those already. Household appliances, I don't get the soda stream thing, but I guess I need to just stop looking at fundamentals and just look at the chart. In a very powerful move, everything is green, had a buy gap up earlier in the week and makes money. I just don't get why I want to make soda at home when I can go to Target and buy a 12-pack for $2. But last week I commented on the number of oil gas exploration services companies I saw in the drillers, and that I thought something was happening. They're less on my list this week, but hopefully you heeded my words. Halliburton was one of those we talked about. We looked at it here. Pulling back to the 17-day, and gap open on Monday with a kahuna in volume, Tuesday, Wednesday, Thursday, and Friday with a Bible gap up. This thing is beaten down horribly. It might have to do with the Horizon lawsuits being settled with rig, more drilling in the Gulf, but I think there's a fundamental change going on in this sector, as I talked about last week. Dresser Rand didn't even know what these guys did, but apparently they're in the same group, engine and turbines, and a little bit perhaps better looking chart, lower left, upper right, lined up nicely on the moving averages, all is green. Earnings per share coming in the stock, trades at a multiple of 27. Couple last things, OmniVision, I put this in my bottom fishing category, but I'm intrigued. Sort of a saucer bottom, broke above the 200-day and held. So I know I could put my stop, less than 80 cents from where my open is, take out the close on Friday. I might want to buy this, put my stop down there in that 200. Everything has turned green. It's got pretty phenomenal earnings per share coming into the stock, trades at a high multiple, but much less than its earnings per share. And they make the cameras that go in so many of the smartphones. Probably got hurt a little bit by the Apple as well. Lastly, I mentioned some other shortcuts. There's a thing called the group inclusion filter. I'm not going to go into how I generate it, but it allows me to see which are the stocks that show up in the highest number of smart groups, which are some pre-selected scans. 3D systems, we should look at some of these, but these are the ones that came to the top. Most of them we've seen already today. And basically, where these get derived in HGSI, there are a number of pre-planned scans called smart groups, ranging from things like those having a pocket pivot to others along the lines of different characteristics of the HGSI universe. So you can figure out you can do a thing called group inclusion filter. It helps you identify which stocks occur in the highest number of smart groups, and perhaps those are the best stocks to play. And I do those every week. So here's the top 30 stocks for the warehouse view, and let's see if any of these look interesting. Michael Kors, of all the retail stocks, probably has the most growth. Pull back. Here's your saucer. I think this runs again. Everything's turned green, good earnings per share growth, and it's getting close to taking out its highs. Maybe you put a buy point above that amount. Most of these we've looked at. 3D Systems and Stratasys, they're still relatively cheap if one looks at a market cap. These guys make 3D printers. They're all the rage. This one's $4 billion. I think Stratasys is half the size. They've had huge runs. They're extended. So they've come off their highs as we predicted last week as they got up to the high jump bar. But this and Stratasys are both very interesting looking companies. Again, pulled back, but in nice, powerful uptrends. I guess I see all the things that I want to talk about today. If you want a big pharma stock that's got a, I think is really in a nice move uptrend, you sort of had a cup and another cup, maybe a handle. It's going to take off now, all green. This is VRX. Now, one thing about HGSI, when things don't make sense, check them elsewhere. They're relying on third parties to provide earnings per share numbers. And why would you have something that's $1.25 go to zero? So what I often do is I go into MarketSmith, and I'm a big fan of this program as well. And I go into launch this. It'll take a second. I'd meant to do this before we started. I'm going to do this, Sprinters, Edge Raider, and say goodnight. So if I go into, if it lets me go into, let's see if it's going to work. Come on, there we go. Sometimes when I'm doing these things live, they don't do what they're supposed to do. Of course, it's never my fault. Look at multiple of 15, growth rates, very high, big earnings, 15 times 560, 75, $84. If it makes its earnings, keeps its multiple, stock goes up 30, 40% from here. Then you have to ask, why would it keep its multiple of 15 when its growth rate is increasing? They've done a number of acquisitions, so I like this a lot, and it's one of my favorite big pharma stocks. Sprinters, I mentioned other shortcuts. If I go into all securities, I go into my view, and I'm going to go into, I'm not going to go into my separate ones, HGSI strategies, Woodward and Brown, reference groups, which I went right by, and somewhere in here you'll find Sprinters, and let's see, I think it's in miscellaneous, I think is where I found it last week. This gives me a list of great performing stocks. We rank it by raw combo, and many of these we've looked at. United Rentals, I think we looked at last week. This HES, equipment rental stocks, and if you look at a lot of the building, you'll see United Rentals on them, are also in a big run. Probably another one of these pinball stocks based upon the growth of the home builders. This is another funny number here. I think there were some charges built in, but they've got great earnings per share growth, as you could see, and trade at a multiple of 14. So when I see huge earnings growth, a turnaround play perhaps, where it lost money in March of 11, I get very excited. I think the stock is in the early hours of a very big bull run, and you could see how it pulled back, and it's off, taking out its all-time highs over the last couple of weeks, like a lot of other stocks that we follow. So Sprinters identifies a lot of great stocks. Many of the stocks that we looked at today, some I eliminated by looking at their charts. And then lastly, to get a sense of where the market is, I like to look at EdgeRater, and I like to take a look at, within those Bollinger Bands, what percent of the stocks are trading above the mid-level, and you can see it's 88%. Now that's very bullish, perhaps getting extended. And then I see that 15% are above the top Bollinger Band, 20% are at the top slice, 90% to 100, 22%, 80 to 100. There's probably too many stocks living up at the top. When I get to see this pattern, I get a little bit nervous that we need to have some pause to refresh. So we may continue to go higher, but I think the risk quotient is getting a little bit is higher than it was. Now, one of the nice things about this program, very quickly, I talk about green candle lows, red candle highs on a regular basis. I can take my green candle low scan, which I'll give to people who come to the HGSI meeting, drop it into that selector, and basically hit run, and it should give me a list of all the S&P 1500 stocks on a given day that are having that green candle high. Now what's cool about this, or I could have looked at all securities, run that, we should have a few more popping up. So I can run multiple different scans of the things that I look at in HGSI. And so these are all the stocks that had a green candle low on Friday. I can right-click on that, copy it, and take that into another program. But what I really like about it is I can update quotes intraday with this product, something that I cannot do with HGSI. So in the middle of the day at 3:30, I'll do an update on data, and I'll use that update to help me understand what's moving and potentially put my buy orders in before the market closes. On that note, I thank you for your attention. Tell your friends if you like this. I'll keep doing this as long as people watch it. Have a great week in the market, and good night.